Big tech companies are investing millions on artificial intelligence, but it's still unclear when investors will see the return on that investment. And chip stocks have been taken along on a wild ride as a result. For more, we're bringing in Ruben Roy, applied technology analyst at Stifel. And Ruben, we know these big tech giants, these hyperscalers, they're aggressively spending on AI, but we've also seen the volatile swings these past few months. So from an investor perspective, what are the biggest concerns that you're hearing from your clients?
Yes, hi, thank you for having me. Certainly, I would say the number one question we're getting is this investor debate around, as you said, all of this investment that we've seen now going on, I guess, 2 years relative to ROI or returns on the infrastructure investment. Where's the beef or where's the money on some of the infrastructure that's being built out? So from an investor perspective, it certainly seems like there are concerns as we look ahead to 2025 as to the sustainability of the capex spending from the big cloud service providers, whether or not investment spending will extend into Fortune 500 enterprise, and what's next for the big suppliers of hardware into the investment cycle, like Nvidia, for instance. And so certainly that's top of mind for investors. And, it's been reflected in the volatility, as you mentioned, in the stock, Nvidia underperforming the S&P 500 over the last 3 months, but certainly having a very strong year to date, nonetheless.
Top of mind for those Nvidia investors, Ruben, also is what demand looks like for that new Blackwell chip. What are your checks suggesting there?
The checks have been solid. And it's not just Blackwell. There were a lot of concerns heading into Nvidia's quarterly report late August around timing of Blackwell, whether or not Nvidia was having some technical difficulties with Blackwell. But certainly coming out of that report, certainly I would think would ease some investor concerns. The numbers were solid with a nice beat for the July quarter and a nice raise relative to consensus expectations for the October quarter. And Blackwell hasn't started shipping yet. I mean, we're talking still about a lot of demand for the existing Hopper architecture. And if you kind of look through and speak to the supply chain or look at some of the supply chain commentary, certainly it would sound like demand continues to far outpace supply. And so when we look at 2025, I think something that investors should take into consideration is that Blackwell is not one product. It's not a GPU. It's a lot of different configurations of systems that NVIDIA is going to be selling into a lot of different types of AI infrastructure builds. I would say one thing that really becoming evident, we saw OpenAI unveil their O1 LLM over the weekend, is that the size of the AI clusters is moving higher. And I think that that's really, really interesting as you think about NVIDIA's positioning in AI, not just, like I said, GPUs, but system software and the overall infrastructure that's required for AI.
So Blackwell demand strong, but I do want to go back to a point you made earlier that investors are concerned about the sustainability of this spending from these big tech players. Are there any signs that investors can look out for ahead of NVIDIA earnings when you're looking at that demand picture and whether there is a slowdown of spending?
Certainly in this type of spending and the rate at which spending has been growing, which we've never seen in covering the space for in excess of 20 years, it's not sustainable for, forever, right? So at some point there will be digestion periods ahead. What are some signs that investors can look for or, signs of progress for the AI infrastructure vendors like an NVIDIA is that in our view, we haven't even really broached I think the extent to which AI is going to impact a lot of different industries. We're building out these training clusters and we're putting into place large language models. But I think there's a long tail investment cycle coming beyond this, which is going to take the data that's being generated by the language models and then actually doing something with that data. So the so-called training of models, moving to inference of those models and putting that data to work. And I think NVIDIA and others, we cover AMD, which we like very much, are building infrastructure around their hardware. So adding a lot of different types of software resources to their hardware to get ready for that longer tailed investment cycle. And so while the numbers may not continue to grow at the rates that we've seen, it's going to be interesting to us to see where the spend is going to flow, right? Is it going to flow into some areas of software that NVIDIA is expanding into? Is it going to flow into other areas of hardware that we haven't seen yet? We'd like to think about AI at the edge, AI moving into things like personal computers, mobile handsets, even automobiles. And so I think, we're going to see a lot of these companies expand their approach to AI to address a lot of these end markets and benefit as the spend moves around from, again, what we're seeing today, which is the core infrastructure around large language models.